So, Matt,
Yes.
today it's a Matt and Nicole show where we're going to talk a whole lot about money.
Oh, I love it. I love it.
How to get it, how to keep it, but mostly, more importantly, how to understand if you want a loan in your business.
Yes, I like money.
Me too. Hey, just a reminder, our show is brought to you by SmartCookie Media, where we believe data tells a story, and not just any story, your business story. As a subscriber to the show or as a client, you'll get insights on profitable, data-driven marketing strategies that work for you and your business, your industry. Not some cookie cutter trends, no. Ideas that are led by your customer data so you know they'll work for you. Connect with me on LinkedIn or Instagram to learn more. Everything's in the show notes. Now, let's get back to the show. Okay, so a couple of things, folks, to know first, what we're going to talk about here. We are considering a couple service providers we know and or a brick and mortar that we know, a couple others that have been walking through some of this ugly money lending situation.
Yes.
And we're going to talk about what could happen to you.
Yep.
Lenders, do some crazy stuff.
There's crazy stuff that goes on out there.
There is. And sometimes that's your only option. But I want to set the stage really clear up front. This is not a for startup episode. This is for established business owners that have at least 2 years of revenue, that they're making money.
Yes.
Now, this could be a great episode if you are starting up a business and you want to understand what are your options for lending in the future. But this is really for our established business owners that are finding themselves like just hitting a brick wall and trying to find funding.
Correct.
Or are now stuck with bad lending, bad money.
We're not commercial lenders. We're not going to come from that aspect, giving any sort of lending advice in that capacity. But what we can do is tell you what our clients and people we know are walking through today with some of the current economic climate and some of the lending practices, we'll say, as well as some of the risk tolerance of banks, what they're looking at now too, especially where interest rates are at. It is very relevant to today's news, I would say.
Yeah, I think so. But also a lot of these things that we're going to share are things that are like, they have survived the test of time.
Correct.
Yeah. Like nothing here is like,
like you already said, 2 years.
Yes.
Frankly speaking, if it's I would say a rather legitimate lender of any sorts, they're going to want to look at 2 years of your, at least 2 years of your history, look at some sort of projections and whatnot. If you're still within that first year, there's a reason why there might be only certain lenders that might want to talk to you.
Right. And certainly, it depends on what your financials actually look like.
Sure.
You look like you're in the hole. Yeah. And you just turn this episode off.
Yeah.
Go check something else. Yeah. Because if you're in the hole, like no one's throwing money at bad debt.
Right. Exactly.
Okay, so let's get started.
Yep.
So it's going to be a short mini episode. We're going to talk a little bit about what some business owners believe they need as working capital loans versus what I'm calling collateral backed loans, right? Something that is tied to a property or maybe equipment. So let's talk through a couple of people that we know have gone through this. They had choices to make about equipment, choices to make about maybe payroll or a lag there.
Yep.
There's something, some type of staffing. Maybe expenses got out of control a little too quickly. I can only speculate on different situations. And they tried to get approved several places. Right. 2 or 3 of these tried lots of places.
And some of them, especially on the equipment side of the business, I know a lot of people sometimes, if you're a service provider of some sort and you need equipment to achieve, your growth of your company, you're in this weird hamster wheel of, well, I need more equipment. I need to buy more things. I need to buy more items. Right. Maybe it's inventory. Maybe, you get this weird hamster wheel of,
chicken or the egg.
Chicken or the egg. Yeah, exactly.
But you have to have the eggs in order to sell them.
Exactly. and yet you're still growing and you're like selling out. That's the crazy thing. How do you balance that?
Absolutely. So we had talked before the show that neither one of us know anybody who's had a successful working capital loan that's significant.
Right. No.
I believe at one time, like Axion, which is a nonprofit lender, they do some lending. They might touch working capital, but they usually touch still something that has some collateral, like equipment, and they will make sure that everything in your building or room is licensed.
Oh, yes. Yeah, exactly. And that's the key thing here. We know so many different entrepreneurs and business owners and very successful ones that when it comes like a working capital loan, have they gotten them? Yeah, but it was after their success. It was after a certain point in time. It seems like they reached there, like, to get this growth, this expansion, it was like there. It wasn't like a startup. It wasn't like this early days kind of thing.
And the 1 or 2 that I know of, like through Axion or through some of those other lenders, it's been like dog-eared for a certain project.
Yes.
That they probably didn't need the $10,000.
Correct. I should have said that. Yeah. It was dog-eared for something very specific that they're like, we want to get behind this, right? As a lender.
So collateral backed would be if they had a property.
Yep.
If they had a building that they were going to build.
Yep.
Equipment. So anytime that someone's considering a business loan, is there something that the bank can take away from you? They like those loans.
That's their favorite. And oddly enough, that's the reason why student loans are kind of an interesting, how are they going to take that back? Federal government, please back this up, right?
Okay, so let's talk about some other options that
Yes.
I think that are more common as an entrepreneur. I mean, we call them pretty words like bootstrapped,
Right.
but it basically means every dime that the entrepreneur has had
Right.
or decided to lend themselves to the business
Correct.
is self-financed.
Right.
Yeah.
Exactly.
Like, I mean, this mic right here.
I paid cash for that, Mike. I
You
drove
bought it. It's
the
self-financed.
cash to Jeff Bezos' house and he shipped the mic to me. He wouldn't even let me take it home with me from his house that day when we hung
That's
out.
right. Yeah,
He
that's right.
wouldn't even let me
You're
take it
right.
out.
Yes.
Exactly.
But that's my point. That's self-finance. Like
Right.
you bought something
Exactly.
for the business. You can put that on an expense report and you
Right.
can say, hey, the business owes that to me, whether you choose to have the business pay you back right away or not. So you could be bootstrapped, meaning like every dime that you've earned in your business, you're just putting back or a
Yep.
portion of it. You could be self-financed. So
Yep.
let's talk about that a little bit. Most of the loans, even the loans we just talked about with collateral, are going to have some type of personal guarantee.
Oh, they do?
Mhm.
Really?
Yeah, that's what my attorney says.
Okay.
Okay, so I think that's a future episode. We're going to talk a little bit more about when there's personal guarantees, but the reality is it's your business, it's your baby. Yes, you
Yep.
have an EIN number. Yes, you're a separate LLC. Sure. But are you the human behind it that has a record of paying off your bills? I mean, if you want to get a loan.
Ideally, if you want to get a loan.
Yeah.
Exactly. Yes, exactly.
Okay, so let's talk about that. So there's options, of course, to refinance a home.
Right.
Yep.
Get some cash out of that.
Yep. Maybe it's a 0%, I hope, credit card.
Or a lot of the people we had on the show, if you recall, are people who just ran out and got credit cards and utilized them. You know?
Ran them up. Who's the movie producer, director, Clerks? Well, I just lost him. Son
Oh,
Bob's name is
Kevin Smith.
Thank you.
Kevin Smith.
Yeah, I think he said he took out like $300,000 worth
Yeah.
of credit. Something I'm not, or no, it was like 50, and then like he started seeing the payback. Now I'm not
Right.
recommending that that's the way to go, but if you
Yes.
believe in yourself, you're ready to bet on yourself, especially if you're going to bet on the movie Clerks. I mean,
Yeah.
wow, that was a good bet that he made. But like, who better than you? So
Yeah.
money out of a home isn't a bad idea until
Right.
you don't document.
I need to say this real quick. We would never encourage you to run out there and start doing those kind of credit cards unless there happens to be an affiliate link for that credit card. And we're sponsored by our good friends at American Express today, folks.
They wouldn't people want anyway.
Oh, exactly.
But the point is, so we have heard that guests have done that.
Yes,
We have
of
seen
course.
some success,
Yeah.
but let's face it, there's plenty of other people that are littered on the way with
Right.
not great success. But we have to do what we have to do sometimes.
Right.
Okay. So that can happen.
Right.
And when someone, like, for example, takes out refinance on their home
Right.
or a line of credit, maybe we have seen people get denied loans
Right.
because they never established
Mhm.
where the business got that money.
Yeah. For instance, in one of the scenarios I'm thinking about right now, sometimes there was a lot of transparency that occurred up front. I'll just say we're like, hey, I just went and did this and I bought X with Y. And they're disclosing as if they took this money out of maybe real estate and converted the equity of real estate into business assets. And so if it's said a certain way without any proper documentation, some lenders will view that as commingling, like you have commingled the equity of your home, your personal residence,
Right.
that has perhaps a federally backed loan and whatnot. You have commingled that asset into the assets of your business. And they go, we don't want to deal with any of that now, right?
Right. As a former loan originator, licensed in 3 different states,
Okay.
the reality is when you are in a conversation with a licensed loan originator, you might think you're talking with a friend.
Right.
Because we were friendly.
Right.
But the reality is if you say a few things like, well, I just took out money from my home, but your business is not you.
Right.
You want it to be treated separate. Matt always
Right.
says, what do you always say?
What do I say? Keep listening?
No.
Oh, I'm sorry. No.
If you got to treat your business like a
If you're going to treat your business like a business, or if you expect the court to do so, you need
or
to do
lenders,
so.
right? So when you're in conversation with a loan originator, you think you're talking to a friend, but you're really talking to someone who has a quota and has a license. You know, one of the check marks I remember in mortgage origination was, is your down payment borrowed? Did you borrow for somebody? And I guarantee you plenty of people have borrowed their down payment.
Oh, yeah.
It better not be reflected on that patient.
Yeah.
So I'm not telling you how to structure something here. I'm just saying to you, when a loan originator hears the wrong answer,
Mhm.
you're done.
Yeah.
And so the way you can make sure it's the right answer, and what I do in my business, I'd be happy to share. I might share a template at the
That'd
end
be
of this
great.
or whatever.
Yeah.
Is I make sure that I always have a monthly expense report. If ever I had bought something, like recently I was at IKEA, I bought a desk and I didn't have my business credit card with me. So
Mhm.
I put it on mine. So there will go on an expense report, that amount for that IKEA desk. And then that's payable to me. So
Mhm.
now that's documented month in, month out, however many times
Right.
this year I have that. And now it's a paper trail, right?
Right.
So if there was, you pulled out money from a line of credit, or you
Right.
pulled out equity out of your home,
Mhm.
and you wanted to lend your business $25,000, right?
Right.
Then they're less concerned. They just know the money is a transaction on a piece of paper.
Right. And Nicole's accountant, plug your ears right now. On that same expense report, are you showing the trip to Greece?
No.
As the I'm asking.
Only we get to go take the show on the road.
Oh,
This
showing
is
the
what I've been
this is what you're
saying.
saying. Okay, I
That's what
got
I've
you.
been
All right,
saying,
I got
friends.
you.
Who
Okay,
wants to
yes.
take the podcast
Exactly.
on a tour
Of
yachting off the coast of Greece? I'm
okay,
in.
again.
I'm in. I'm in. And that would. I mean, plane tickets. Now,
Yeah.
now maybe a couple of things would have to go on my own.
But nonetheless, though, I don't want to skim over that because that is very important. You are documenting what is really occurring here. And I know this sounds kind of like boring stuff. Yeah. So how do I say it's nice? But like, it's sometimes even our naivety, if that's, really the proper terminology, I guess I should say here, is that we don't know any better. We just say, oh, well, I'm just doing this for this. But if you really look at what was happening there, I took money from X to do something with Y. This is me thinking about the first bank of Matt. If Matt's law firm needed to borrow money and he went to a bank, I don't go to the bank and ask the bank, hey, how do you guys make money? Where did you get your money from? How are all these deposits here?
Actually, here lately, we actually are asking our bankers. That's
probably that's pretty fun. But needless to say, how do you make money? Where is that money coming? We don't do that, right? So then why would you do that then with yourself personally? Right. Where I got that money from is between me and maybe whoever I got my HELOC from or whatever, right? And so now that money is my money, it's personally mine. And then at that point in time, if I choose to now loan that money to Matt's law firm, as long as it's documented correctly, can accept that loan. Here's the kicker there. What do you need to do from a documentation standard? I would say you have some meeting minutes, host a special meeting. Maybe we'll throw a template of that in there too. So a quick little one-pager special meeting that is on behalf of the business that shows the business is accepting a loan for a specific dollar amount with perhaps a specific interest rate. And have it documented and signed in that way it's in your business records. Right?
Yeah. So I think it's so great that you said it because you said it just a few sentences before, document it correctly. And when we all hear that as non-attorneys, we're like, we're doing something wrong.
Right.
But it's not. When you just explain what it is, and we will, let's look in the show notes. When you see that it is just an agreement. Now, I'm going to do an expense report because it was under $300 for the desk. Like that's not a big deal. But if it was $30,000, right, and lending to we want to make sure we have that. Maybe you have a policy written somewhere else in your operating agreement that's like, hey, up to $1,000, no big. Maybe it's more for your business, depending on what it is.
My operating agreements every single time defines what's a major capital expenditure. Right. $5,000 or more, $2,500 or more, $10,000 or more, 25. I don't know. It depends on your business.
Folks, if you have a spouse or a partner, longtime partner, that there's probably a dollar amount that you have a conversation with your partner, or you don't. But there's probably a number. Like I remember when Kyle and I first got married, it was kind of agreed like, okay, it's about $300. We should probably check in with each other, right? People over the years, like that's skewed a little bit after I threw this kid's birthday party recently.
Oh, there you go.
My point is though, the same way with the person you sleep next to every night, you need to do that with your business. You need to make sure that there's this noted conversation.
Oh my God. Did I just get invited to kids' birthday parties so you can write out the kids' birthday parties at a podcast expense?
That's a good idea. I'm going to go back.
I'm just mind blown.
Can I backdate that?
Mind blown. All of a sudden, only get an invitation to kids' birthday parties, especially the expensive ones from what I just learned.
I mean, I'm glad you know.
Okay. All right.
Okay, wait. I just want to tell you that this episode, it's brought to you by Run Like Clockwork. There is a book, there is a program, there's a boot camp, but I want to tell you the reason why this particular episode is here, in fact, the entire show, is because of one commitment I made to make sure my business runs like clockwork. If you're interested in what that system could look like for you so that you have more freedom and flexibility to do the things that you love, say, yes, I want my business to run like clockwork without suffering any type of burnout. If you want more information, of course, reach out anytime, but I also included a link in the show notes. Okay, back to the show. So we want to just point out this stuff isn't easy, but it's also not hard with just a little bit of good discipline. Our cool templates, that's for sure. Yes, they are free. They'll be down at the bottom. And making sure that you understand what's at risk, which might be an upcoming episode, that the options are, of course, paying off these items. Right. But the only other option is some type of bankruptcy.
That's the only other option, really.
Right.
With respect to the idea of, is it simple? Yes, but it's more of the discipline thing. And it's the idea of you need to have good maintenance with this. You suggested you do this every month. If you're going to look at your financials, look at, are we making money once a month? Might be a good time to revisit. Oh, by the way, I bought dinner for that client that Tuesday night. Reminder, do an expense report right now, right? Or, hey, I'm talking to a lender right now about certain things. I should probably document in some sort of meeting minutes, right?
Right. Yeah, I was just thinking about the expense report just to make a fine point, because some people might say, well, in the case of this mic, for example, it was $50, $100, whatever it was, right? Hung out with Jeff. Right. You might be saying, but Nicole, I don't mind if every once in a while I just buy something for my business. Okay, I could totally get it. But if you had it documented, you have a better chance of being like, well, that's a liability owed to me. and proving it later on when you need to sit down with that lender. That way it doesn't look like, well, sometimes you buy stuff or sometimes this is an asset. So there's just like a clear record. It doesn't mean if it's $300 a month you spend on your business and it's okay for you that I took a buddy out to lunch or something and it's okay that you don't collect on that. That's fine. But as long as you have it documented. And then if you did, want to get paid back from the business when you hit it big.
And I think it's something to where so many of the people I know having some of these issues right now, it's not that they are trying to pull one over on a lender, right? It's not that they're like, oh, I'm trying to hide that lunch or this microphone or what. They're not trying to do any of that. It's, in fact, the intent is actually a very good intent. I took money out and I used that money to loan myself money for my business.
Right.
The intent there is correct. The problem is the documentation.
Right.
Also, the problem, let me be very clear, is what you say. Going back to what Nicole said, you can even be doing the proper maintenance. If you start saying things like, I took money out to do this, that, and the other, and it comes out just even in a slightest bit questioning of whether it's something that the bank wants to take a risk on, because that's the other thing we have to talk about in the current economic climate and current banking era that we live in right now. I think some banks are looking at some stuff with a little bit more scrutiny. Their underwriting guidelines might be a little bit different. I've talked to one of my clients recently that was looking to take a collateral backed loan. And 3 months ago, 6 months ago, it seemed like it was a done deal. And now all of a sudden, it's not going to work. They need more equity. They want different equity, or they want different collateral that is now that 6 months ago they weren't talking about.
Right. Well, yeah, the standards always change. I mean, and this is about buying money.
Right.
Like, let's get really, really clear. You're buying money.
Right.
So if you have an opportunity to grab it and you need it, do it. There's no shame in that. That's what goes back to self-finance or bootstrapped. I mean, it doesn't mean you have to spend it all.
Right.
That's for sure. Be your own slush fund if you need to.
The other thing that we need to think about too is that when it comes to this opportunity to get money, too many of us think of it like, oh, why would I want to go get a loan right now? I'm doing fine. One of my buddies always says this when it comes to commercial lending. He's like, it's one of the things when you need it, you can't get it.
Right.
When you don't need it is when you can get it.
Yes.
And there's probably a whole nother thing we could talk about, establishing better credit for your business, using your EIN and stuff like that. It's something that we all need to be doing and be focused and intentional about, but none of us really take it that level probably as far as disciplining ourselves to start to establish more credit underneath that EIN.
Yeah, actually, I mean, you can't always at every level.
Not at every level, especially at some of the numbers we're talking about and some of the dollar amounts we're talking about.
Like Dun & Bradstreet do not care about different numbers.
Yeah.
No. And again, those serial entrepreneurs that might be listening and have had lots of success.
Right.
May not need any of this. But when they want that building,
Yeah.
they want to leverage debt, which is I think what you were trying to get to, the point you were trying to make.
Yeah.
Is leverage the debt
Yes, exactly.
as a tool in your business.
Again, yes.
Not just worried that you have a liability on your books. That's okay. Leverage the debt instead. Have it there when you need it.
Yep.
There you have it.
Yeah, exactly.
Well, folks, we hope that this was just a little bit of energy into your day. We hope that you'll share it with somebody who you know may just need the good discipline that we talked about, or might be considering how to get a loan or to get out of a bad loan.
Yes.
That is what we know for sure, is that people are facing some high risk loans because they have to, because they don't have another option, or they're worried about mixing their personal life, their first home, or maybe they got a second home that they're also not wanting to risk, and they don't want to bring in family. They don't want to bring in other assets.
Let's define a little bit more. You just said high risk loans, right? And people have asked me, well, how was I supposed to know it was a high risk loan? Your company was 6 months old and these people were throwing massive amounts of money at you, 5 figures for a 6-month-old company that didn't have to show really any financial proof of where they're going, what's happening, what's occurring, no pro forma, no sort of business plan. And they threw a 5-figure loan at you, even without even looking at the interest rate. I could probably
Yes. So, but that's a really big exaggeration. So,
right.
So let's talk about, there will become other ones that'll be, they're funders. So they have a bank charter in New York. They must be legit.
Right.
Okay. So yeah, look at interest rate. Sure. What is legal in your state?
Yeah.
You can actually Google that, look that up. What's legal in my state for a loan? But then there are high risk in terms of not just like how long you were in the business, but maybe how much they want to give you versus your own financials. Like, would you give yourself that big of a loan?
Where I was going. Would you give yourself that loan?
Would your family? And I know like family is family, but like if your family's like, no, I wouldn't do that. Also, what is their track record?
Right.
That funder, who are they? Yeah. And whatever you're feeling in terms of like, well, I had to have it. I needed that. It needed to get me through. I think you need to talk to someone. Matt's not licensed in every single state, but he is licensed to talk to anybody. So there's that. So he might charge you, but he does that so that he can make sure that he gets you his best thinking power. Mm-hmm. But there's probably somebody near you that could think through that isn't the licensed commercial loan officer, right? That you can talk to ahead of time to make sure you are structured and you're ready for not high risk.
Right.
High risk would also mean that they're not a bank around the corner. They're not a credit union. They're not somebody right near you. So.
Yeah. If there's somebody that you just found online, do a little more due diligence on that person, I guess is what we're trying to say, because There's also some interesting things from a legal process wise of how they structure those loans. Lenders sometimes can even find ways to go above and beyond some of those state limits, depending on where that loan's coming from. Is
Right.
it being funded off of a Native American reservation, for instance, right?
Right.
Crazy things I've seen happen. And people are like, I filed bankruptcy on this 10 years ago. How are they still trying to come after me? Well, hate to say it, the type of lender you got in business with and
They
you
don't-
took a loan from.
Yeah, I know you get to talk to a whole lot more people. I get to talk to people a lot about money. But if you don't have people like us, find somebody, because there should be no shame in this. And I think
No.
that there's shame when someone's trying to make that decision.
Yeah.
They've got to just get the $25,000, the $50,000.
Right.
And they're like, I just have to do it. Where someone like me comes at it like, I bet you there's some revenue. There's some hidden money in your business that you're
Right.
just sitting on. Could you take 30 days to find it? Or, with you, I think
Right.
it's about how can you structure something either to find it. You're really good at
Right.
finding revenue
Yeah.
as well. But then also, how do you have the best chance to go with a small local bank that might be most interested in your money staying right where it is? Well, folks, if you're listening, you know what we always say.
Keep listening.
You've been listening to the Serial Entrepreneur Show, produced by the team here at SmartCookie Media.